Foresights TV with me, Isma. The announcement of President Donald Trump's tariffs has sparked widespread turmoil in global financial market, with the Indian equity markets suffering a significant blow. The Indian stock market hit a 10-month low, wiping out more than 20 lakh crore in investor wealth within moments of opening. The tariffs, which are country-specific and a high as 50%, has caused a massive sell-off, particularly in Asian equities, with the Sensex plunging nearly 4,000 points and the Nifty dropping over 1,000 points in early trade. This dramatic market crash, linked to Trump's aggressive trade policies, has intensified fears of an impending global recession as well as heightened economic uncertainty across the globe. Here's a special story from Foresights TV. Trump's new tariffs, ranging up to 50% for some countries, have sent shockwaves through global markets. Specifically, the tariff imposed on India is 26%, with an additional baseline 10% duty for all nations, sparking panic among exporters and traders. In India, this has triggered a massive market sell-off. The Sensex opened 3,939.68 points lower, and the Nifty tumbled by over 1,160 points, representing a staggering loss in value. The Indian rupee also experienced a sharp fall, dropping by 30 paise to 85.74 against the US dollar. Trump's tariffs are framed as necessary steps to correct what he perceives as unfair trade practices, aiming to give US industries a competitive edge. However, the sudden announcement and the sharp increase in tariff rates have caused anxiety in global markets. Asia, which was the first to open for trading after the tariffs were announced, has seen the most significant impact. Stock indices in China, Japan, Hong Kong, Taiwan and Singapore plunged sharply, with China retailing by imposing 34% tariffs. The Hang Seng Index dropped by 10% and the Nikkei lost more than 6% of its value. Experts are concerned that this is more than a temporary market correction. It signals the possibility of a long-term global economic downturn. The trade war, intensified by Trump's policies, has created a climate of uncertainty, exacerbating fears that it could lead to the global recession. The market collapse was not confined to Indian and Asian equities. US futures also pointed towards significant losses when trading resumes in the evening, reflecting growing apprehension among global investors. Analysts argue that Indian markets are feeling the ripple effects of global economic slowdown, as the country is deeply interconnected in international trade and investment flows. As a result, India's markets are not immune to fallout from Trump's tariff policies, and domestic measures like fiscal reforms, monetary policies and targeted economic packages are expected to be necessary to shield the Indian economy from further damage. Sunil Gurjar, a SEBI-registered research analyst, indicated that the Nifty 50 had breached key support levels, signaling a potential continuation of the market decline. Many analysts are now calling for immediate measures to stabilize the domestic market and protect the Indian economy from global disruptions. The situation in Asia reflects a broader trend of market instability, with stock markets across the region suffering significant losses. In addition to equities, there are rising concerns about global recession, which has been further amplified by Trump's defiant stance. Despite the global sell-off, Trump has maintained that the tariffs are an essential medicine to fix long-standing trade imbalances, dismissing the bloodbath in global markets as a necessary part of the process. Trump's tariff have triggered significant global market instability, particularly impacting Indian markets with a loss of over 20 lakh crore in investor wealth. The tariffs aimed at addressing trade imbalances have caused widespread market sell-off, especially in Asia, raising concern about a potential global recession. India, with its interconnected markets, faces severe economic challenges and may require fiscal and monetary reforms to mitigate further volatility. The global economic trajectory will depend on how governments and central banks respond to these trade disruptions in the coming months. That's all for today. Thanks for watching Foresights TV with me, Esma.